Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 18th of March. We're hanging out on a Monday. The weekend's over, and the bulls kind of stayed in control for the most part today. Didn't see a ton of overall huge moves in the market, just kind of keeping on kind of the, really what we've just started last week and have really just kind of continued here and at least to today. And good afternoon, Majid. Great to see you. I hope you had a fantastic weekend and a great day in the market. It is, it goes by quick. Before you know it, it's going to be Friday again. It's always Monday or Friday in my head. So, hey, Lloyd, great to see you again, my friend. Welcome. Hey, Whitney, good to see you, buddy. Just as far as earnings go, really light. Just kind of an interesting note. Tilray is reporting after hours and kind of looked like they beat on revenue and we're up a little bit. I didn't have a chance to dig around, and I don't do the Tilray thing, so I don't care all that much, but I know it is kind of an interesting stock for a lot of people. So they might be one that has a big move before the open tomorrow. As far as S&P companies, nobody reporting either tonight or tomorrow. Really light on the earnings front here going into tomorrow. Looking at today's heat map, since we don't have a lot of earnings to look at, really for the most part, as you can see, and as you guys already know, for the most part, the bulls kind of stayed in control of things. Healthcare did see some selling and showing some more weakness. We've talked a little bit about it kind of separating certain areas, but now all of a sudden you're seeing some of the medical device companies breaking some support. We'll take a closer look at that as we get to the ETF. Another solid day for a lot of the tech companies. Facebook really kind of face planted again and are now testing support and their 50-day moving average. On the other side of it, Amazon broke resistance, broke its 200-period moving average. Apple's getting close to testing it. So I think we still continue to be in an overall bullish stock pickers type of a market. So taking a look at the S&P 500 on just the intraday, nice pop to get the day going, a little bit of a pullback, creating a higher low, and just kind of a slow but steady climb throughout much of the rest of the day, closing near the highs, not quite at the high points, but clearing near the highs. And great to see you, Marcelo. Hello, my friend. Here on the hourly, you can kind of see, and we're really showing strength on the shorter term time frames, at least in regards to, say, the hourly time frame. On our indexes, let's just take a quick peek. Here's the NASDAQ kind of above everything. Here's the Dow Jones, finally kind of above everything on its hourly chart. Even the Russell has kind of gotten above all of its moving averages. So we're seeing some decent looking bullish hourly charts, which of course is kind of the first step, right? We kind of go from 1 to 3 to 5 to 15 and so on and so forth. So looking at the daily chart, probably more importantly than any of that intraday stuff, is we held that breakout point, continued to see some upward movement here today after closing that resistance level on Friday. Always something that's very important for me, that follow through. What do we do the next candle? We can be faked out, right? We've all seen it. We've probably all been there a time or two, and we'll probably be there a time or two in the future. But a nice close above that resistance level just makes me feel a little bit better about being bullish in the market. We know how long we fought that level of resistance, so it's nice to see bulls willing to buy on that break as a group. Hi, Patricia. Great to see you. I hope you had a fantastic weekend. So still not a lot of resistance. Now we do have our Fed meeting on Wednesday, so that is something, I don't expect it to be a huge deal, but that doesn't mean it won't be. That certainly doesn't mean it can't be. So, we'll have to keep an eye on that. From a technical point of view, though, to me at least, there's still room for us to work to the upside in the S&P. Yeah, we might look a little bit extended, off of, last Friday's low into today's high, but really not a lot of resistance kind of in the way to challenges. So I continue to like where we are overall in the market. I certainly continue to like the NASDAQ, much like many of the other coaches. Certainly my favorite area right now after breaking out early last week, just continuing that slow march up to that next resistance zone, which I'm calling around 74, looking kind of at this old swing low. Again, maybe it'll take a pullback to get there. I would like to see it just kind of go straight up, especially because tech's one of my favorite areas from a bullish point of view, but a pullback wouldn't be a bad thing necessarily, right? We basically are now, 6 days, off of those lows, from last Friday. So, pullbacks are okay with me. No real reason, in my opinion, to say that we should expect that to happen, especially tomorrow. But, just kind of keep that in mind. I always like to mentally prepare myself for pullbacks. How do I want to deal with them? Because, I don't really love sitting through pullbacks personally. But as far as resistance goes, still got a little ways, still above everything, still showing a lot of strength overall in the NASDAQ, no doubt. Over in the Dow, getting a little more into the game, up a 0.25% today. It wasn't a huge day in the market, just kind of a drift to the upside for the most part. But we were able to once again kind of carry on that momentum of finally breaking above the 9 mid last week, finally closing right at that 20 here on Friday, finally closing above that 9 EMA here today. These are little things, but they're better than no things, right? Especially when we're looking at these short-term moving averages. That's kind of how I read them. Not a lot of resistance. We still have room. We still have Boeing. And that is definitely a potential drag on the Dow Jones as a whole. Now, Boeing's kind of been holding its own, building its own little floor. We'll take a look at that floor before we call it a day today, but it's, a big component of anything it's in. And in the Dow 30, where there's just 30 stocks, it represents a decent percentage. So that's something that we'll want to keep in mind. A lot of the other components are continuing to look very strong. But on an index level, I'll call this one more little bullish signal personally, closing above this 20. My next thing that I want to see is this 9 kind of get back above that 20. That would kind of be that next signal that we want to take a run at this resistance zone. At least to me, that's how I would interpret that. And hello, Marie. Great to see you. We couldn't get Cody to tell the Kraft Heinz joke. We'll try again. We'll try again. I'll corner him on Wednesday or Thursday when I'm hanging out in the halftime report, and I'll make him tell it. I want him to be the one that tells it, so we can kind of either laugh at him or laugh with him, right? It's kind of a dad joke. So over in the rut, kind of starting to see similar things to the Dow. It's still a little bit behind the Dow, in my opinion, at least. We have built a pretty decent little floor. Last week saw a little more upward movement, closing above that 9, running right into that 20 here today. Little more overhead in the Russell than the Dow, in my mind. We still have to contend with that 200 if and when we start to see more upward movement. And while I won't think that that's a huge deal because it's flat, because it's more of a sideways type of a situation, as we've seen, that absolutely can still act as especially a short-term level of resistance. So we want to keep an eye on that if we continue to see some movement. Of course, the big one is going to be 16 for our major resistance level. A break of 16 probably goes to the top of the list, but until then, it probably won't be on the top of the index list. So over in the the material sector, put in a little bit of a hammer turnaround type of a candle within the sector. If you look at this on an hourly chart, it actually is showing some, bullish signals, in my opinion. When we really develop that throughout the course of the day, going into today, we're kind of hanging around on the hourly 50 below these short-term hourly moving averages. And again, not so much necessarily for a trade, but just to kind of get an idea of momentum. I think this can be helpful for us. Starting to break back above those averages. Those are just little signals. Right, from a bullish point of view. Now, with that said, I think the big question, and I think it's a legitimate question, is say we see upward movement, as a whole, on this ETF tomorrow, we still have to contend with that 57 resistance, or I'm sorry, that 56 resistance, which isn't that far away. So, I think the real debate in my head right now is, do you just let anybody who wants to take the pullback while you wait and see if it can break that resistance and use that as kind of the entry? And for me, that's kind of where I'm leaning. There's not a lot of room between where we are today and that resistance level. I just know me, I'm going to feel a lot more comfortable taking that out, and I'm willing to pay the price for that if I absolutely have to. But I could see the argument on the other side. If we do see some upward movement, we are continuing to make higher highs and higher lows, and a little bit of momentum going into 57 or 56 maybe. I'm not there. I'm going to like it a lot above that 56 resistance. I think I'm going to kind of keep it that way for the time being. Beyond that, we do have some room to move in my mind within this sector. So I don't feel like I have to make that choice, or if I don't get in on the pullback, I might be missing out on the next big opportunity or something like that, at least as a whole within this sector. But a break of 56, I do think is a very solid break, especially with the price action we've seen over the last few weeks at that 56 marker. Energy might test us as soon as tomorrow. As we've talked many times before, in my mind, the signal is above that 67 area of resistance. It's a little bit technically lower than that, but that's kind of where I'm going with it personally, because it's like 66.85 or something like that. A break of that, I will call that a bullish signal. We saw a little movement in crude here today. There are some, interesting setups, and even some of the bearish looking setups in energy kind of started to look a little less bearish with today's price action. I will maintain that a break above that 67 is a signal that I'm going to really like. I'll continue to wait for it. Personally, I'm not in any rush, and I'm definitely not comfortable buying at that resistance level by any means. You guys know me. But beyond that, really, we do have a little bit of room to go, probably into that 69 range, which was a really strong resistance zone back last spring. For anybody who's joined us recently, we went very sideways last spring for over a couple of months before finally breaking out, and our numbers were kind of around 65 and $69. So I'll look at that as being that first level of resistance to be keeping an eye on if we're able to take that out. If we're talking tomorrow and we're saying resistance 1, I'm not going to be all that surprised. Resistance is pretty difficult to break, but we do have a little momentum going into it, so it's going to be an interesting battle for sure. Financials pushing right through that 200 period moving average early here today and running right up into that 27 range, closing just below it. I think we actually got into 26.98, so we were just below it on the intraday, sold off a wee bit, nothing dramatic. A break is pretty nice because we're seeing, at least to me, it's pretty nice because we're seeing things that have already broken out, like a Bank of America that took out resistance here today. You're seeing things like Goldman Sachs that are knocking on the door of breaking resistance. I know you also had, COF. So there are some breakout type of trades that are lining up, at least potentially in my mind, with this break of 27 with not a lot of resistance until we get back into these November highs. Now, we've seen these November highs in all sorts of things, the market, the material sector, even the technology sector. We've seen these act as resistance zones, so I do think we're going to want to keep an eye on them as we approach them wherever we may be finding them, which would make it difficult to want to maybe trade specifically the ETF for me because there's not a ton of room, about 50 cents is all. But on an individual component level, I think there's really interesting looking setups and a lot of interesting looking breakouts in the financial sector right now. We'll see if we can push through that 27 here tomorrow and see where that one takes us. Over in industrials, a little bit of a bounce back day, which I think we kind of needed, especially with the price action that we saw late last week, establishing, what it, potentially could have been and could still be a lower swing high. Saw that downward movement on Friday. Nice, really solid, bounce back candle here today, right up into that resistance zone. Makes me feel a little bit better. Now, with that said, I want to get back above here before I'm too excited about the industrial sector. And again, we are dealing with Boeing as a component here, so we want to keep that in mind. They haven't really been super volatile since since early last week, but to me, that's the type of thing that could, any given day, something could move that dramatically. So we want to keep that in mind. But I do think if we can get back above this resistance, I'm okay to start looking back into the sector on an individual component basis, trying to work back up into 77. That needs to happen first, and it certainly hasn't happened yet to me. So we'll see if we actually can carry this through. That would be a little bit of a signal that would have, kind of, for anybody who maybe was going bearish, and I don't know that it would be me necessarily on this chart, but for anybody who did go bearish on Friday, I would imagine their stop loss plan is somewhere above that swing high. So pushing back through that swing high should knock some of them out, should give some of the bulls, who overall I still am more bullish than bearish on this sector, give us a little more peace of mind, if you will. So I think that break is, at least for me, it is a very important, it needs to happen for me to feel comfortable, at least short term, overall within this sector. Over in tech, just another decent day in the technology sector. NASDAQ's been doing fantastic. The tech sector's arguably been doing even a little bit better than that. Just another day at the office, again, fairly extended to the upside, and I'm calling resistance around 74 or just below it at this old pivot point down here as far as an area is concerned. It just looks very strong. Some of these things are breaking resistance or have broke out and kind of working towards their kind of last level of resistance. So it really appears to me to still be a very strong sector. Overall, maybe a little difficult maybe to get into new swing trades with the movement that we've seen over the last week, but definitely keeping things in my watch list within this sector, if nothing else continues to be very strong. And while I'm looking at 74 as a potential resistance area, or around 74, really 76 is really the next real level of resistance in my mind. I will monitor that. You guys know me, I err on the side of being a little conservative versus a little aggressive, but really there's not a huge test of resistance in my opinion until we get to 76. So I still think we have plenty of opportunities if we can continue this run in the market in this sector personally. Over in staples, just another day not convincing me. So, we continue to knock on the door of that resistance, and probably depending on you might even be calling it a break. I know I certainly am not. I continue to call a break above 55. Above 55, am comfortable with the sector as a whole. There are some interesting charts that may be there for us, but until that happens, I've just seen it too many times. They've got to sell me on that break of 55. Continuing to show good overall momentum, my cowardice notwithstanding, I think it's wise to, whether you think it's already broke or not, I think it's wise not to buy at resistance and wait for the break. And so I think really the argument would be, has it or has it not broken just yet? I would argue that at least for me, it has not broken. I need to see a 55 close before I'm willing to call it a break. As far as support goes, really, as long as we're staying above this Friday low, which is really the case in so many of these different sectors and the indexes, I think that kind of goes, we talked a little bit about it last week, but I think that's as important as anything for me, because from a technical point of view, I know that if we break that, that's a pretty decent sell signal. And as long as we stay above that, it's hard to be too terribly bearish, at least with the way the charts as a whole are looking right now. So these swing lows that we put in last Friday, I think are very important price points on anything that did it, to be quite honest with you. And the staples is certainly no exception for me. So another day, we'll have to see if they're able to break tomorrow. A little bit of pullback continuing. We saw that downward movement on Friday, a strong bounce back. Saw a little more selling here today, well off of the intraday lows, though, continues to be very strong. Now, what I hope to see happen is a pullback into that 57.25 zone. Back into that old resistance level, back into that 20-period moving average, which could set up some really interesting trades either late in the week or early next week. Now, do I expect to get that? No, I don't expect to get that, but it never hurts to ask. We've seen so many times when things get hot and are running. I mean, look at the utility sector. It's not closed below its 9 EMA since we broke out. Right? Whether you called the breakout back here or you're a little more wimpy like me and called the breakout back here. ever since we've broken out, we have not closed below that 90 EMA. There continues to be a lot of positive momentum, and when these things get on a roll, it's easy to stay on a roll. So hopefully, from my perspective, hopefully we get a pullback. Not maybe the most exciting swing trading instruments, as you guys know, but I'd like to debate it. Right? Generally, I don't choose utilities as a swing trading instrument, but I like the opportunity to think about it. So a pullback into that 57.25, that 20-day moving average, that old resistance level could be very interesting. Just not going to hold my breath that we're going to get it. Over in healthcare, I almost, last week I was, and I still overall feel this way, definitely not comfortable with the ETF as a vehicle because we're seeing so much, some things look great, some things look terrible. But today, with a lot of, the BDX and Boston Sciences of the world, breaking down, we saw a lot of things take out support. This one was particularly ugly. But really what I'm more worried about than how ugly this candle was is now we've put in these lower highs and lower lows. Now I know it's early and it may not be time to just go bearish yet, on a one-day break of support. That would probably depend on your rules. But that is a shift in momentum, in my opinion. That is a violation of trend. Not only did we do that, but we failed at this old resistance. And this is just one stock within the sector. So the sector can go one way or the other without any individual stock. But now all of a sudden we're starting to see more and more things because we're still seeing things like Cigna and CVS and United Health still look like they're in bearish retracements. All of a sudden there's a lot more ugly stocks in this, at least ugly from a bullish point of view perspective, than there were early last week. So overall, I still am not interested in the ETF as a vehicle personally. Individual components, I am all right with either way, but to be quite honest, probably more interested in them from a bearish point of view right now than a bullish point of view, just moderately, right? Scoreboard wise, maybe I'm minus 45. For me, minus 30 is aggressive. I hear, for Matt, minus 15 or minus 10 is aggressive for a lot of the other coaches. For me, minus 30 is really aggressive. Minus 45 is, if I had to, I'd lean a little more to the bearish side. 30 for me is aggressive. So we continue to hold up regardless of my personal opinions. Just make sure you're trading with the trend, of course, always. I think we all kind of adhere to that philosophy. And there still are some strong upward trends like a Merck, even arguably a Lilly. It's kind of gotten a little bit messy, but there still are some decent looking stocks in there. But just be careful and make sure you're following your rules. On the ETF level, just really continuing to hold up. So, and as long as we hold above this old breakout point, what's kind of developed into our new little floor here, okay, I'm all right with it. My concern is if we see downward movement, all of a sudden that looks like a bearish retracement, at least to people who are particularly bearish in this sector. I'm not particularly bearish, but that would concern me. I do think you have to call a break of this 91 a sell signal, whether it's a tradable sell signal or not. That's going to be up to you and to me, but I think I would call it that. Probably wouldn't overall look at it as a tradable, but again, I'd be okay with things individually. Bearish wise, I probably won't be bearish on healthcare until we break this support level. And I'm not saying that's going to happen. It may very well not. We may never get close to testing it, right? But this seems a little murkier than some of the other sectors to me. And whenever I feel that way, whether I'm right or wrong is not really what I care about in that regard. I'm not afraid to put you in timeout, as you guys know. There's other things I like better. We'll see. I'll let you develop for another week. Maybe we go sideways for a week. These charts kind of shake out a little bit, and then we break out of the top next week, and I really like you. Right? I'm not afraid to put a sector or a stock in timeout. I do it all the time. So, and interesting. Did you do so? You did a Merck straddle going into earnings, Marie? Is that how you were playing that one? That will be interesting. Will keep us posted. I like volatility builds for straddles more than volatility crunches, personally, because again, I'm kind of a wimp. So the thought that it could gap up a lot always scares me. I like the, volatility build pre-earnings personally a little bit better, but yeah, keep us posted. That I'm never afraid to see a nice little straddle or strangle in action. So we'll monitor how we're doing, because we really have established, and maybe let's go into a 4-hour window here really quick, a nice little floor that over the last little while, right? And again, nothing really has happened yet today. The only thing that really happened is individual components started breaking support that we didn't have breaking support even last Friday. So it just kind of concerns me a little bit. On the other side of things, awesome, Marie, great to see that. So there you go. I understand. So on the other side of the coin, we've got discretionary running right just shy of that 112, that old high point. I have, of course, been keeping an eye on that as an entry point, as a nice bullish signal on things within the sector. Of course, Amazon breaking out and breaking above its 200-day moving average definitely helps this, right? It doesn't hurt when Amazon is on your side, but there are some interesting looking charts, within this sector. If we can break that resistance, hasn't happened yet, but we are kind of knocking on the door. Now we do have a Nike with earnings this week, so they're probably off the board for me at least, and they can impact the sector if they're crazily good or bad. But you have things like Home Depot that are trying to hold the 50-day moving average after kind of a disappointing earnings, or at least response to the earnings. Yeah, McDonald's on the other hand, kind of a little bit of a triple top, potentially developing for a break. I would imagine that I'll have McDonald's on my watch list for a little while for a potential break above that 188 zone. If we can do that, you guys know me, I'm a breakout trader. Again, Nike with earnings, a little bit more difficult. You have Lowe's that's starting to show a little bit of signs of life. You have TJX who's kind of knocking on the door of a little bit of a short-term, potential breakout at an old floor. So there are some interesting looking charts in my mind within this sector. I'm going to like that, and I thought I was going to, and that has not changed. I am going to like a break of 112. I think this will become one of my favorite short-term sectors if we're able to just carry this momentum. Now, maybe tomorrow, and I wouldn't be surprised if tomorrow's kind of a boring day and ahead of the Wednesday Fed meeting. We'll see where we go. I wouldn't mind that really. But 112, we're knocking on the door. Whatever you individually think versus what I think, we're knocking on the door of resistance, of that pivot, with a little bit of room from 112 into that 115 area before our next real challenge as far as resistance goes, in my opinion. Over in real estate, a little more of a pullback day, much like the utility sector. I would like to see it continue to sell, maybe the next couple of days, before giving us maybe a little turnaround candle later in the week or early next week at around that 35 range. We'll see if we get that. First 2-day pullback we've had in a while in this sector. So I do think we're going to need a couple of days if we're interested in a pullback, or at least if you're trading by my rules, you need at least one or two more days before maybe we're getting that pullback. But I think, again, REITs generally aren't the most exciting swing trading instrument in my head, but I want to be able to have that debate. So I'll continue to watch for a pullback, much like utilities. How can you ignore it with as strong as it has been? And over in communication services, they fought Facebook valiantly all last week. Finally today, Facebook's continued insolence just got the better of them. Now all of a sudden, Facebook is testing the 50-day moving average, testing this swing support level off of a gap. If that gives out, I don't know the future by any means, but if this gives out, this is going to have a negative impact on that ETF, for sure, on some level, because of how important Facebook is. And there's really, because of the gap, not a lot of support to catch us up. If we falter at this support, we've broken the 50, we've broken the support zone, there was the gap, and nothing had a chance to develop for potential support. That doesn't mean it has to go back down there, but technically speaking, I can't see any reason why it wouldn't go down there. Something new would have to develop. And of course, I say this because Facebook is such a big part of this ETF. Now, on the other side of things, you have Google in kind of an interesting little pullback type of scenario off of that 1200 or 1200 zone. So looks a lot better, at least to me it does. At least I like its chances a little bit better than Facebook right now from a purely technical point of view. But we still have to contend with that resistance. That's not nothing, right? Support, round number, old resistance zone, sold off of it here just last week. Some of the gaming companies not doing great. Even Netflix, I thought finally Netflix was going to be able to kind of cleanly break out and sell people when it was at 368 earlier in the day. But Zoom, just like it has been so many times, just refuses to get any momentum or keep any momentum. I still don't really like this area. You guys can probably tell that. But a lot of the components just aren't that appealing to me right now. And with Facebook really starting to show some signs, and that break of support will be the big one in my opinion. Hasn't happened yet and may very well not. Those things all can weigh on the ETF, and so I do like a deeper pullback, Marcelo, on Google. One this tight, and again, this is a me thing, kind of my personal style. I'm just scared when I see that resistance level. I think that needs to be the target, right or wrong. If I trade Google or someone says they bought into Google, my head thinks that this resistance needs to be the target. Doesn't mean they're wrong. It just means that's what I think. And so without a little bit of a deeper pullback, I have a hard time seeing a risk to reward that I would feel comfortable with. Now, I could easily have a different opinion in the 1165 range. Or even in the 1170 range, pulling back to this high. So we'll see how it pulls back. I can understand the argument. We're showing a lot of strength. Just, for me, that 1200 would always be just a little bit above 1200 actually would be the target. And right or wrong, I would build the entire trade around that. So we're too close for comfort for me right now, but that doesn't make me right. Wouldn't be the first time I was a little more on the wimpy side of things. We are in a pullback right now. We'll have to see. Now, if we pull back a little bit, Facebook holds support, Google takes a run at that resistance or breaks that resistance, and Facebook's at least able to hold up within a sideways range, maybe this turns into a pullback opportunity. Without looking at the individual components, I would look at this ETF as saying, yeah, you know what? It's not there yet, but on this chart, I could see a case for potentially going in from a bullish point of view. If we get a confirmation candle as early as Wednesday, I need that candle tomorrow and the entry on Wednesday. But when I look at the individual components and I see Netflix, just whatever reason, just can't get above that resistance, Facebook showing signs of weakness, Google at a level of resistance that right or wrong concerns me. The video game stocks, Activision Blizzard kind of testing its 50, falling 50. EA just refuses to break out of 100. And so there's just little things that, individually wouldn't make such a big deal. But when I think about them collectively, I'm thinking, yuck, I don't like anything in here. I like maybe Charter, within this area, at least from a charting perspective in the shorter term. So we'll see where this pullback takes us. We'll see if Facebook can hold that support. Maybe that can change my opinion. But today, yeah, not for me, right or wrong, not for me. So over in the volatility index, just another day. Not a whole lot, probably won't see a lot going into tomorrow either, although you never know the future. Maybe we get a little bit of movement with the Fed announcement on Wednesday. If it's a bit of a surprise, perhaps we'll have to see, but really right now, again, not a lot to see here. As Marie pointed out here and Larry pointed out over in the clubhouse, this low VIX does open up the door for some potentially cheap insurance. Definitely something worth considering at least, and good on you to both of you. Definitely wise advice. Over in the dollar, still trying to figure out if it's going to continue to sell or if this is a bull pullback. It continues to make higher lows, so I don't think you could make a strong case that it's done anything wrong. I think you're entire selling cases that it got to resistance, and it did, and so while I wouldn't make that trade, I understand that logic. Right now, I don't think you could make a strong case either way. I don't think it knows exactly what it wants to do as of right now. And so continues to hold right above that 50 period moving average. As of right now, we have not broken that support level or anything like that. 96 probably the next level if we continue to see some selling. We've seen a lot of price action at 96 before. That's going to be just north of that 200-day moving average, which we saw a really nice bounce of last time we tested it. So we'll see where this one goes. For me, again, I'm really just waiting for it to come out of that longer term trading range. Personally, not really interested in trying to swing trade within it. But I know a lot of people are, and so I certainly understand that. Over in gold, not a lot to see here. Not a lot changed from a purely technical point of view, working back towards that 50 and selling off just like we did Friday off of that 50. I don't know that that means anything, but kind of interesting. I think for me, at least, a buy could be above this level of resistance. I don't think that's a great buy signal, but I do think it is a buy signal, and I would definitely call it a buy signal. Whether it was a tradable buy signal, that would be the question. So I do also believe that below 1280 is a tradable sell signal. Right now, we're kind of in the middle. Somebody may make the argument that below this little floor at 1290 is a signal as well. I would definitely not want to buy it if it broke 1290, but I wouldn't call that a sell signal. Developed a little bit of a couple days floor. If that develops a little longer, maybe we can revisit that, think about it a little bit differently. But right now, I think really the signals are break above this swing high. If that happens, then we will have created a higher low and a higher high, and at least you could make the argument that we're getting back on track within the trend from a shorter term perspective. If we break, exactly, if we break 1280, well, that's a pretty big level of support, and if we go in to a weekly chart, that would be a pretty ugly potential weekly reversal where we hit a high, worked down, broke support. That would be pretty ugly in my mind. Now, we're a ways away from that even potentially happening realistically. Doesn't mean it couldn't happen though, right? It doesn't mean it couldn't. So I don't really think this is a great swing trading environment right now. And I really, even though I would call that a buy signal, I don't really think it would be that interesting of a tradable signal to me. I'll then have to worry about this resistance zone here that's right above it. This one just might be one of those areas that needs, several weeks to kind of shake out a new trading opportunity before at least I'm comfortable with it. And I'm all right. You guys know me. I'm all right with that. I love things that do that, as we'll find out when we look at natural gas. But before we do, over in silver, very similar price action, up and down, closing in the middle, still below that resistance level. I think at the bare minimum from a bullish point of view, you've got to be above 1550. I don't think I would call that a signal that I would be interested in trading personally, but again, I could understand it. Higher lows, breaking above that old resistance zone right now. That clearly is a level of resistance that the market's watching. I don't anticipate it to be easy to break through 1550. If we do, then again, we have to deal with the 50-day moving average. We have to deal with 1575. We have to deal with 16. We have to deal with these highs. So for me, from a bullish point of view, I'll continue to be patient and just enjoy the ride, enjoy watching it. The signal is above this break right here, and that's a ways away, and that may not happen for a very long time, but that's a good signal in my opinion, and it's worth waiting for. Below 15, I think you could make an equally compelling case to the downside. Well, we double topped, we broke down, we kissed goodbye, we broke support, and there's really not a lot. There's lots of little things, but there's nothing major until 14. So I think 15, 1550, and 16 approximately, although it's really like 16, 13 up here, are the numbers that are important to me in silver right now. Don't think it's a great environment to try to be trading the metal personally, just at least right now. But it wouldn't be the first time I was too wimpy to do anything. So good afternoon, Justin. Great to see you, and great work in your project. So very interested in seeing your findings, my friend. Over in Natty Gas, lovely. Didn't gap out one way or the other. Another day hanging out in the trading range. Every day it hangs out in this range. Makes me that more excited, as a potential signal when it breaks out of that range. Now, you guys know that for me, I like the bullish signal better than the bearish signal, and it's simply because that 250, that's old support at 250, that's real. That scares the heck out of me from a bearish point of view. And that would be some room, but I still have to contend with this little floor around here, around 256. It just seemed like it'd be really tough trading conditions. I would definitely call a break below this a sell signal, especially with the length of our consolidation. Just would see it being difficult to trade on a swing trading basis. A break to the upside would get us above pretty much everything and not a lot of resistance until that 313 or 310 or so. So I continue to, and again, the longer this develops, the more comfortable in my head I get with the notion of actually doing something if we break to the upside. Hasn't happened yet. Wouldn't mind another boring week hanging out in this trading range. It can stay here as long as it wants. I've got no problem with that. I'm almost comfortable saying, yeah, you know what? Might be something to cash flow, if nothing else. Generally, I'm not going to try to swing trade natural gas futures contracts. And when I say generally, I mean never. So that would scare the heck out of me. But we're still in that range as of right now. We'll have to see. Eventually, it's going to come out of it, whether it's this week or not. Well, it certainly doesn't have to be, right? Certainly doesn't have to be. So awesome, Justin. I'll check that for sure. And over in crude, just continuing, we kind of took out those highs. It's not been fast. It's not been furious after breaking out of 58 last week, but we just continue to steadily push to the upside over in crude as this breakout just continues to kind of do its thing. We're seeing that 9 push up even further, not a lot of resistance until around this 6150 area, which is that 200-day moving average. There's little things that could concern you, but major resistance, I think for me at least, is going to be just at this 200 period moving average. So there is some room and not a lot of resistance between here and there that can hold us down. So I think right now, you continue to overall be looking at crude from a bullish point of view, whether that's, trading it, cash flowing it, or waiting for it to give you sell signals so you can go bearish, wherever, you find yourself. I have a hard time seeing, technically a bearish argument in the short term on crude right now. Just another decent little, move off of that break from last week. So first level of this break, of course, should be our first level of support. So I'd look to 58 to kind of be that support, or approximately 58. We saw that, late last week a couple of times. And then these moving averages, short term, the 9 and the 20 here to potentially act as support if we get a little bit of a pullback, if we don't have it in us to run all the way to that 200-day moving average in one shot. So who knows? Sometimes crude can definitely move, but it can also take its time. That's why, we have to take it day to day with everything, but certainly with crude. So ladies and gentlemen, that is going to do the market recap for today. But as always, it is certainly my pleasure. Thank you for joining me. Always more fun to do this with you guys than to do it on my own. So thanks for hanging in there with me. If you are new around here, be sure to subscribe to the channel and hit that notification bell, and join us over at Tackle Trading on Twitter as well. Kind of see what we're up to. You can always find me at FrankMartin23 on Twitter as well. If you ever need to find me, or if you'd like me to get you added to our Team Tackle Twitter list, be happy to do so. So just let me know wherever you see me. I'll be happy to get you over there. Come join us on Twitter. We have a decent time. Lately, we've got way too many Monty Python jokes. So we need somebody with a different sense of humor to kind of mix it up a little bit. So with that, ladies and gentlemen, if you enjoy the recap, it's always helpful and appreciated if you do give it a thumbs up. So thank you in advance for that. And thank you for that as well, Marie. With that, guys, get out of here. If you're new to trading, I'll be doing our onboarding webinar here this evening at 8:30 Eastern. So feel free to join me in there. If you're just getting going and getting used to using the Tackle Trading website, we'll go over quite a few things in there. So a lot of you guys aren't brand new traders, so you probably don't need to. You're always welcome to come hang out with me, but go enjoy your Monday night. You don't need to hang out with me. So with that, ladies and gentlemen, get the heck out of here. Have a fantastic Monday afternoon and evening, and I'll see you same time and channel here tomorrow. Thanks, guys.